Hey, what's up, everybody? I just want to go ahead and review Euro USD. Um, we'll go ahead and check out the weekly time frame. I'm gonna go ahead and give you guys my bias on this pair for right now. We'll go ahead and start from scratch and then work our way up. So let's go ahead and get started. First thing first, we want to notice is like where we at overall. Okay, so we can tell that since my nose is fogged up. Since January the 14th of this year, we started a downtrend. This downtrend started with a bearish and almost a bearish. It's a bearish piercing pattern, or uh, also referred to as the dark cloud covered pattern. So that's right here. Let's see if I can highlight to it. Okay, so this is gonna be annoying. Okay, so we had a dark cloud cover pattern up here. It's a three-piece forex terminology, naked forex pattern. So that's a reversal sign, especially with it being at the top of an uptrend. Okay, so at that zone 1.2454, that's where we had that pattern. All right, in this little congestion area, we see that we spent a lot of time up there. Again, this is the weekly candle, so from December 2017 to March 2018, we was up in here. So a few patterns to notice, keep note, just so you can see that history repeats itself with these patterns. Over here is another pattern. You see we have an island top, and also a bearish engulfing candle. Then the next week we had a doji candle. We also had a inverse hammer, and then following this candle is pretty important. I want us to see the opening price is nearly equal to the body, and then it closes low. So you see how it closed below all of this space to the left of it. Grab another one. Okay, that candle closed below this entire space, like all this gap. I'm gonna show you this candle did. So that candle cleared that entire gap. This support level was held, and then it finally broke it. You see that, guys? Okay, so that was the important candle right there. So that's our big boy. We have a seller. So now we can assume that the rest of the traveling space and time is gonna be bearish. Okay. I also have a EMA on here. I have three EMAs here. Also give me the indication as for a sell. All right. So now we're gonna move forward in time, and we saw this support level right here. And what I'm gonna do, I'm gonna turn that one blue for you guys. Okay, so you see that was support, and then that support then turned into resistance over here. Okay, and then the candle that was responsible for that. Let's see here. We had this. We had a bearish engulfing candle right here at the top of this. Highlight that for you guys. Right here, bearish engulfing candle was formed at the top of that level. Also, you can see that there was another rejection candle right next to it. This guy. So you see, guys, I'm just always looking for candlestick patterns, and they just stick out to me. Each one tells a story. So that's what we need to pay attention to. So now, if you guys don't see, what's going on, I'll try to draw a line out as well. There we go. Okay. So if you want to follow my finger, so we had down movement, up. Now, when it came up, this became resistance immediately. So on this day, May 27th, that's when that became resistance because price tried to come up and couldn't make it. Okay, so now and then also keynote that this became the temporary support. So now we had a range. Okay, and then within this range there was a fake out move right there. That's a fake out move, and the fake out move happened to be bearish engulfing pattern because you see that one white guy, that one white bull, he tried to make it up, and immediately the next week he got shot right back down. So that was a last ditch effort. Okay, and the last ditch effort followed by black bearish candle pattern pushed it down below the support level. Okay, so that's key things to note. Once it broke down, now we have the old support becomes new resistance. Okay, so that's where we're at currently. We're old support equals resistance. The past few weeks, and we can see here that the sellers proved their strength right up in here. This candle, and what candle was that? That was the week of January 6th, because the bulls pushed price up and the bears pulled back down. Now, look again. Looking at more candles, we can see that this black bearish candle right here, it engulfed that white candle right here. Boom. So I love that candle pattern. Um, it's very significant. Okay, so it closed, and then there was a retracement followed by another bearish belt pattern. So, boom, 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 boom. This is what's going on. Now you can kind of see, now that I've drawn it out. Boom, boom, retracement. Big push down, retracement. Bearish push down, retracement. Now what happened at this last bearish retracement this week, close of this week, we can see we had a trend line here. Now let's zoom in on the daily time frame and see what this looks like before I move forward. Here we go. So you can see where I drew my trend line, right? Let's go ahead and draw it out right here. So yeah, this was my trend line. Okay. Now this trend line is very important. It's a down trend line. Why is it so important? Because we've created lower lows, right? 3 consecutive lower lows. That's a downtrend. Okay. We have these touches, but this poked out. Now, what's key to note here that these last couple of days was that it created a forex pattern as well. There's two patterns right in here. Okay, so let's clear all that out. So basically, what I'm saying is this is actually another fake out, just like it's done previously. Last ditch effort. Remember we saw the weekly time frame? That white candle right here. Last ditch effort. It created what's called an inside bar. Okay, so that means the black day is within the white body's day. Okay, the volume, the black body is inside the white body. It's a inside bar move. So the inside bar move was followed by this this bearish candlestick. Now it doesn't look like a pattern itself though, but just the formation of it, the anatomy of it looks very bearish. You know, the opening price was high, and it closed, you know, at the bottom percentage of the body. So anatomy of that tells me that was a very bearish day ending, and this was Friday. So that's why this is so important to take all this into consideration. So this move entirely, the inside bar, the way it goes is whichever it breaks out is the side is going to continue down. So since it broke downwards, I'm going to assume that it's going to continue downwards Also see that we had a very strong uptrend right here, slow. It took, 1, 2, 3, 4, 5, 6, 7, 8, 9. We had uh, 9 consecutive higher highs. A lot of white candles. Um, so we can see that it took a lot of selling pressure to defeat all those buying pressure. So adding more significance. But let's go back to the trend idea, the trend line topic. So we see that we had this trend line, and it was violated here. But based off the forex pattern I just discussed, it was a fake out move going down to the downside. Now that's my theory. So let's go take a look on a weekly time frame. On a weekly time frame, we can see that we have quite a few patterns going on right here. So let's take a look at these four candlesticks. Let's get that. So these four candlesticks. So this black candle is engulfing this white candle. So there's an engulfing candle pattern right there. Boom, boom. This white candle is inside the body of this black candle. Okay? Boom, boom. This black candle is a black bearish bell candle itself, because why? The opening price is the same, and the closing price is near the bottom of the body. Okay, so there was no wick up top. As soon as it opened, it closed. It was bearish. Okay, so then we had this inside bar move right here, right? The white candle is inside the black candle, and this is the fake out. So what is a fake out? A fake out is when the inside bar fakes to the one side to go to the other side. Okay? It can do that in both directions. It can fake to the outside to go to the upside. Alright? And what we've had is a fake to the upside, and I believe the real moves to the downside. Another confluence to that, this is a bearish, look at that tail. Very, very big tail rejection pin bar. So, using all that context close together, guys, that's why I think if you look at the daily time frame, we have a space to fill right here. 1.0827. I'm calling it right now. Maybe I'm wrong, but we'll see. Thanks, guys, for watching.